Over time, three words have had a huge potential for financial gain. These three terms are what? Dividends, purchase, and holding. Over half of the S&P 500's cumulative return since 1990 has come from dividends. You wouldn't have locked in substantial losses during the sell-offs of 2001, 2008, and 2020 if you had adopted a buy and hold strategy. And in the current market downturn, the strategy can probably achieve the same results. For long-term investors, incorporating those three phrases into your investment plan by purchasing and holding dividend stocks can be very profitable. Hey people, welcome back to our channel. In today's video, we will be looking at everything you need to know about the top 3 dividend stocks to buy for 2023. But before we start, make sure to subscribe to our channel, turn on the notifications, and most importantly, watch the video till the end. Let's get started. Number 1. AbbVie. AbbVie is a member of the Dividend royalty and isn't just a regular dividend stock. The pharmaceutical company is a dividend aristocrat and a dividend king since it has grown its dividend for 50 years running. Since separating from Abbott Labs in 2013, AbbVie has increased its dividend payout by more than 250%. Currently, its dividend yield exceeds 3.8%. 12 Wall Street analysts that cover the stock agree that you should buy ABBV stock. A total of 12 analysts have rated ABBV. 6 have given it a strong buy recommendation, 1 a buy recommendation, 4 a hold recommendation, 1 a sell recommendation, and 0 have given it a strong sell recommendation. The average forecast earnings growth rate for the U.S. drug manufacturers, general industry, is predicted to be 12.67%, while the average forecast earnings growth rate for the U.S. market is predicted to be 15.65%. AbbVie's forecast annual earnings growth rate of 18.81% is predicted to surpass both of these averages. The revenue for AbbVie in 2022 is $12 billion. The average ABBV earnings prediction from 4 Wall Street analysts is $24 billion, with the lowest ABBV earnings prediction being $24 billion and the highest ABBV earnings prediction being $24 billion. The average ABBV earnings prediction from 8 Wall Street analysts is $20 billion, with the lowest ABBV earnings prediction being $19 billion and the highest ABBV earnings prediction being $22 billion. The estimated earnings for ABBV in 2024 are $20 billion, with the lowest estimate coming in at $19 billion and the highest estimate coming in at $22 billion. While it is not expected to surpass the average projected revenue growth rate of 7.11% for the U.S. market, AbbVie's forecast yearly growth rate of -0.7% is not expected to surpass the average forecast revenue growth rate of 0.87% for U.S. drug manufacturers, general industry. In 2022, AbbVie will earn $57.349 billion in revenue. By adding additional therapeutic areas to its revenue base and diversifying it, AbbVie's acquisition of Allergan increased its long-term growth potential. The acquisition increased AbbVie's already dominant position in immunology and hematological oncology while supplying new development opportunities in neurology and aesthetics. The second is Brookfield Renewable. The dividend paid by Brookfield Renewable is not its strongest feature. To be sure, the renewable energy company does provide a dividend with a yield that exceeds 4.3%, which is appealing. Maintaining dividend payments shouldn't be a problem for Brookfield Renewable. The price of Brookfield Renewable Partners stock is approximately 22% below its all-time high. Due to declining momentum in BEP shares and a difficult macroeconomic climate, one of the biggest pure-play renewable electricity platforms in the world is Brookfield Renewable. In North America, Asia, Europe, and South America, it owns and operates wind, solar, hydropower, and storage plants. Over the past 20 years, total returns after dividends are more like 2,600%, easily exceeding the broader market. Brookfield Renewable offers investors a mouth-watering 3.3% dividend return despite these market-beating profits. It plans to increase dividend payouts going forward by 5% to 9% annually. Brookfield Renewable has some room to retain earnings and support expansion plans with a sustainable payout ratio of 76%. This number is also quite close to the long-term goal of 70%. The company ended the second quarter with approximately $4 billion in cash thanks to a strong financial position and controlled debt. Due to its investment-grade balance sheet, Brookfield has access to a wide range of financing sources, providing it with substantial downside protection. In 2022, Brookfield Renewable plans to invest $4.5 billion in verticals such as utility-scale wind and solar, carbon capture, distributed generation, and battery storage. A prominent distributed generation developer in the U.S. will be purchased by the corporation lately for $700 million. Number 3. Easterly Government Properties. The dividend yield for Easterly government properties is almost 6.6%. While that level is undoubtedly appealing, I believe an even greater benefit is the consistency of the cash flow used to pay dividends. Due to the spike in inflation, which is eroding the real value of their portfolios and income streams, income-oriented investors are experiencing a difficult year. Therefore, it makes sense that these investors are making every effort to protect their investments from inflation. When compared to the vast majority of REITs, Easterly benefits from a number of significant competitive advantages because of its distinctive business strategy. It gets consistent cash flows without the typical risk of experiencing a tenant default because it leases its properties to U.S. government entities for at least 10 years. Additionally, since government organizations rarely relocate, there is very little chance of unoccupied sites. This explains why Easterly has typically reported 100% occupancy rates. 99% of the Trust's units are currently occupied. This is unquestionably a crucial aspect of leases that helps to reduce the effect of inflation on the real value of the REIT's cash flows. Easterly is essentially immune to recessions in addition to being resistant to inflation. Government budgets are the most recession-resistant tenants in the universe, despite the fact that they may experience some pressure from recessions. As a result, economic downturns have little impact in Easterly. The REIT has a brief history, but it was put to the test in 2020 during the severe recession brought on by the epidemic and the lockdowns that followed. While the funds from operations per unit of other REITs significantly decreased during that year, Easterly saw a 5% increase. This demonstrates the high-quality REIT's resistance to economic downturns. With that, the video has come to an end. Let us know what you think in the comments section to help us expand our community and attract more people who share our interests and are eager to learn. Please hit the like button and subscribe if you thought the video was interesting. Till then, bye!